Hello traders, this is Blake Morrow with ForexAnalytix, and I want to welcome you to the week ahead video for November 26, 2017. This is a very exciting video. The reason why, we have Grega Horvat, our Elliott Wave technician. He's going to take you through the FX pairs and get you prepared for next week. But before I leave you with him, I want to say if you haven't signed up for ForexAnalytix, wait till Monday. We have a special. A Cyber Monday special. So make sure you come back on Monday if you've been waiting to try out ForexAnalytix. It's a one-day Cyber Monday flash sale. So make sure you come back here and try it out. Once you do that, you can see here, download the app via the App Store or the Google Play Store. And then enjoy the analysis that you see here on ForexAnalytix. So with that being said, I'm going to pass you over to Grega Horvat. And once you're done with this video, make sure that you click the like button on YouTube and make sure that you subscribe to our channel so this way you never miss a video. Thank you very much, and here is Grega Horvat.
Hello traders, it's ForexAnalytix week ahead video. Today I will make a coverage for Blake because he's still recovering after Thanksgiving. I'm just kidding. I think it's a very good chance for me to present also market analysis from an Elliott Wave perspective. I don't have much time to be in webinars each day, so I think week ahead video is perfect because I know that there are a lot of traders who are interested in this theory as well. So today I will cover a lot of markets. I will look at the euro dollar, Aussie dollar, dollar yen, gold, crude oil, S&P 500, DAX, Bitcoin, and Ethereum, which also broke very sharply higher in recent days. So euro dollar, as you know, I am tracking a corrective leg within downtrend. I'm looking here on a monthly chart, a three wave drop. So it was wave A, B, and now I'm tracking actually a five wave fall within shape of a wedge, which is called an Elliott, which is called an ending diagonal here for wave C. So I'm expecting a new euro decline here, but before we may continue to look to the downside, we definitely need evidences of a completed black wave 4. Okay, so we need all pieces of the puzzle here within this correction, all subways, before I may turn bearish once again. So here I'm looking at a flat correction. It's a 3-3-5 pattern, which means you will see three waves up for a wave A, three waves for a wave B. We'll normally move and finish the cycle around around the levels of a start of wave A, which was here, and then we are tracking a five wave movement within wave C. Now I have been warning in recent weeks that this reversal can be only a temporary pullback, and the reason was clearly because the previous leg was very sharp. So normally that's a wave 3 and extended within a five wave cycle, and after that there will be only a temporary pause, and we have also see only a pullback to these previous swing highs from where market bounced. So actually looking at the daily chart, it was a perfect ideal corrective wave 4, which did not even retrace 38.2%. so this tells me that bulls are still very strong. Okay, so even if we would see more weakness on euro dollar, it would be still perfect for this to be only a corrective lag within uptrend. Okay, so I have been looking this for a three wave drop, and since market took out this upper trend line resistance, I was confident that we are turning back to bullish mode, and probably we are now going to see new highs for wave 5. Also on the 4-hour chart, we are in wave 3 of this wave 5, and even if you are bearish, even if you think that this is only a free wave rally in ABC, you would expect that wave C will be equal to first leg. Okay, so this comes in around 1.2040, around there, which means that there is room for more upside. However, it's interesting that on Friday actually market closed after it moved into this small gap here from September 24th. Okay, normally those gaps, once they are filled, they will try to either cause a very strong reversal, a slowdown, and in very rare cases you will see an immediate break through those gaps. So what I think it may happen is maybe just a small pullback from this from that levels back to this previous swing highs and then a new turn to the upside. Okay, so clearly I'm staying bullish on the euro dollar and will remain on the bullish track as long as we are actually trading above this end of a wave 4 right there. Okay, also if we take a look at this basic technical analysis, we can see that market actually on a weekly chart moved up actually above this 200 moving average this year and then made a pullback, and 200 moving average reacted as a support. And as you can see, we have now pretty strong candlesticks on a weekly basis, much stronger than the previous decline. So this is an indication that we are probably resuming the uptrend. Okay, so clearly I stay bullish. Now dollar index is also bearish. And I have been looking down because we were still trading well below this 2017 trendline resistance. So I was looking this, obviously same as in euro but in opposite direction, this to be wave 4. So I'm expecting drop into wave 5, and looks like that we are currently in some bearish dollar cycle that could last a few more weeks. So ideally this will be wave 5. Now, as you know, markets are not perfectly correlated, but still, if in general dollar will move lower, we may see some pullbacks on other markets as well, not only euro dollar reaching a new high. Maybe we will see a push higher on Aussie dollar as well, but maybe not to a new high, because Aussie, as you know, and New Zealand were actually very weak. So I have been warning, I also talked about this in webinar a week or two back, that when euro dollar will begin new bullish fifth wave leg, okay, that's when commodity currencies such as New Zealand dollar, Aussie dollar could make and turn higher for pullbacks, not to a new high. Okay, so actually looking at Aussie dollar, we can see that market actually fall nicely to the downside. It turned nicely to the downside in the last 2 months or 3 months. On a daily chart, as you can see, this decline is clearly in 5 waves, which means it's a bearish. Okay, but nothing moves in a straight line. Once you have a 5-wave fall or 5-wave up, expect a 3-wave retracement. So I'm now looking for a wave to pullback in 3 waves. If I label this very quickly, waves A, B, and C. Okay, ideally we will see a reversal back into the area for previous wave 4, which is actually this range here. Okay, but normally you would see also a pullback a little bit deeper back to the termination point of previous wave 4, which is here. So that's actually ideal resistance. Also, what I want to highlight is this previous swing highs, which was, as you can see, a very important one. Okay, because market consolidated and below those levels for quite some time. So if we'll see these resistance levels hold, then I think that this will be a nice indication that wave 2 has ended and that we are headed to the downside. Okay, so watch out for these levels here around 0.7750 up to 7.840 or even 7.896 level, which was termination point of a previous wave 4. So hold this region is very important, because if we see a 3-wave rally into this zone, I think that this will be quite strong evidence that we could actually again turn very aggressively to the downside. Okay, so Aussie dollar, be aware of a pullback, while dollar index trades towards new low and euro dollar towards new highs. Now let's take a look also on dollar yen. Dollar yen has fallen very sharply in the last few weeks. And actually, I'm not surprised, because if we take a look on the weekly chart, we can see that market actually turned down from this trend line resistance connected from 2015 highs. And as you can see, we are falling quite aggressively here. So it looks like that this market is staying in the range for now. But if you're familiar with an Elliott wave theory, then you know that triangles are made by 5 subwaves. So I think that this could be labeled as a wave A, B, C, D, and we are probably now in final leg wave E. But in ideal scenario, wave E will retrace and touch the lower trend line of this triangle range. So market has room for more weakness, while dollar yen has room for more upside. Also, let's consider that stocks are maybe overbought, and that we could see a new pullback soon, which could actually send dollar yen even lower if we consider the dollar yen is already turning down and not following the stock market at the moment. Now, if we take a look on a daily chart, actually I am considering this to be a complex, maybe WXY decline down into wave E, final leg of the triangle. And then once we see pullback on stocks, ideal scenario would be that stocks bounce to the upside, dollar yen also turn higher, while euro dollar could complete wave 5 at the highs, dollar index wave 5 at the lows. Okay, now let's take a look also on gold. Gold, it's not very interesting to me at the moment, but still it's not interesting because it's sideways for the last few weeks. But what I have to consider in a sideways price action is what happened before that. Okay, and what I can see is that since September we have fallen quite sharply here, which looks like an impulsive lag, and always you want to trade or look for next sharp move within that same direction where impulse came from. So it came from the highs in September very sharply. So I see this as a wave A, first leg of a free wave decline, and this consolidation, this very slow price action confirms the personality of correction of wave B, which is actually just a pause within current weakness. Okay, so actually the current price action is very important because it looks corrective, not impulsive to the upside. So as I said, it's probably a temporary pause within ongoing downtrend, and ideally market will drop further into wave C of wave D, which is part of a triangle. So if we take a look on a weekly chart, on a higher time frame, you can see that actually from 2011 we have seen a 5-wave drop, and actually market is just moving sideways since then, and ideally we are making a very big triangle correction before we get another strong drop here. Okay, also let's take a look on crude oil. On crude oil, as you know, I have been bullish for a while, and still I am, because we have seen a very strong push to the upside. Definitely I do not want to chase and go against this leg, especially if we consider that the market made this reverse head and shoulders pattern, and you can see that there are much higher targets, okay, from this reversal pattern. So based on Elliott wave principle, I'm either tracking on wave 3 or wave C. Both are motive waves, which means there is room for more upside. Normally when you see a reversal in price after a completed 5-wave drop like here, market will send us back to the area of a previous wave 4, which was here around $63 per barrel. So there is room for more gains here on crude oil. And this is also confirmed here on the daily chart, where still I cannot count 5 waves up within that wave 3 or wave C. Okay, so there is room for more upside, as you can see, and currently I'm observing and tracking price action within middle of an extended wave 3. However, nothing moves in a straight line. We see red wave 3 running into some nice fib resistance, so be aware of a pullback. Normally this will take us back to the area of a previous wave 4, which would be, let's say, pivot point around $56 per barrel, and then turn to the upside. Okay, on the 4-hour chart, here I'm observing, as I said, final stages of wave 5 of red wave 3, but there is still room for slightly more upside, because this 5th wave, black wave 5, must also be made by 5 smaller waves. Okay, however, next week I think that we could see some signs of a top here of this red wave 3. Also, what I wanted to highlight is this chart, which is actually gold against oil, and this actually confirms what I'm looking on a longer scale. So as I said, gold is probably headed to the downside, is just consolidating within this downtrend, while crude oil is running significantly higher. And as you can see, this potential very big head and shoulders pattern, this ratio chart actually suggests that there is room for much more weakness here, which means that crude oil could go strengthen, okay, could increase much more, while gold could either stay in consolidation or even decline. Okay, now let's take a look on the next market, which will be the S&P 500. So on the S&P 500, we are still tracking, as you know, this wave 5. And what is interesting, that wave 5 is now broken above this equality level. So when you have an extended wave 3, wave 5 will either be equal to wave 1, okay, or it will stop at the parallel channel line. Okay, and this, as you can see, this equality level of wave 1, market passed this level. And also, as you can see right now, market is also currently breaking above this upper channel line, which normally leads fifth wave to prolonged move, which means that we could see much higher prices, maybe even towards 3,000, who knows. And the reason why I think that we should stay bullish here, because we still don't see 5 subwaves within wave 5. Okay, so I clearly stay bullish, but I think that the pullback will likely occur soon, because we can see market in wave 5 or 3, and there is this upper trendline, parallel trendline resistance that I would pay attention on, from where we will ideally see top of a wave 3. Okay, so watch out for this reversal in coming weeks. Also here I have this basic technical chart. There is a very strong divergence on the RSI and MACD. The last time I have seen a nice divergence here, but not so strong one, was here from summer of this year. And as you can see, market made at least 3 waves of decline. Okay, so I think that something similar could occur now as well, when we have even stronger divergence and even again prices in 5th wave, okay, of wave 3. Now let's take a look also on DAX. Now German DAX is somehow, it's leading, it's probably the leader, which the price action that suggests that overall stocks, or that US stocks, will also turn to the downside. We have seen a very sharp decline on Nikkei, we have seen fall on DAX, so I would not be surprised if we see those 2 indexes moving even lower, that sooner or later US markets will also join the current bearish corrective cycle. So here, as you can see, what I'm looking, actually, firstly, I will take a look at the monthly chart, is that I'm tracking a 5th wave within a larger degree of wave 5, but still we need 5 subwaves to the upside, and ideally we will see, and we will step into a new corrective phase, black wave 4. And the reason is here on a daily chart. You can see wave 1, wave 2 pullback, wave 3, wave 4, and wave 5 moved into a nice and turned from very strong fib resistance levels projected from wave 4. So what is really interesting is that market dropped impulsively here. Here, as I will show you on the 4-hour chart, we have seen clear impulsive drop here below this channel support line, which is indication of a turn. Okay, so this type of a price action must be an alert that something is changing. Okay, and normally when you see this move, 5-wave drop from the highs, it belongs to a larger decline, either in 3 waves, either in even larger 5-wave decline. But the important is that after any corrective bounce, market should continue to weaken. Okay, so I'm looking here at on a temporary bounce. I see this either as a wave 2 or as a wave B. We don't know which wave it is actually, because we don't want to predict price moves too far into the future. Okay, so let's go step by step, which means I will be looking for turn to the upside, to the downside into wave 3 or wave C. Ideally, we will retest the 61 or 50% fib retracement, from where I would be looking for a drop. Also, I'm looking here at some very basic technical chart to give you an idea of what is actually correction and what is an impulse. So you can see a very sharp move if we look here on the left. Sharp move up, slow price action. Sharp move up, slow price action. Sharp move up, slow price action. And from these slow consolidations, we have seen always a very powerful breakout. Okay, so now when market turned sharply and is moving sideways, what could follow if we respect what market have been doing in similar but bullish cycle previously? Well, we could expect another sharp breakout from a correction, but this one is into the opposite direction because we have seen first, as I said already earlier, sharp reaction from the highs. So I'm looking for a break to the downside, and also if you take a look at this price action here, it could be head and shoulders better, okay? So watch out for a move to the downside, and if this will happen, I think that that US stock market will also find limited gains in the next week, okay? And now also let's take a look on Bitcoin and Ethereum. Firstly, on Bitcoin, actually Bitcoin, as you know, is very bullish. We see it in a wave 3, and just wondering when we will finally see move into this corrective wave 4. Probably we are in final stages of this wave 3 because we can count 5 subwaves here, as you can see, wave 1, 2, 3, 4, and make it now in an extended 5th wave, which is normally extended 5th waves are very normal for mania cycles. So once market turns, we could see here pullback for 30% as well. Now, if we take a look on the 4-hour chart, what is really interesting is that market broke out of a triangle formation. Now, if you're our member, then you know of ForexAnalytix.com, then you know that I was looking for this triangle. As you can see, his arrow is still here. I was looking for this triangle and break to the highs towards $9,000 per one Bitcoin. But what is really important is that actually market came out of a triangle. Out of a triangles are final moves within larger trend. So larger trend, as you can see here, sorry, larger trend, as you can see here, is from November lows, waves 1, 2, 3, 4, 5. So this larger trend could be finished very soon because we are seeing prices in a 5th wave. So be aware of a new 3-wave retracement. And now let's take a look on Ethereum. This one is finally breaking higher. We have been looking for this triangle consolidation. We were tracking it for the last 3 months or so. We have seen just contracting range with 5 subwaves. So normally you expect break within the direction of a larger trend, which clearly was bullish since market made 5-wave rally here from start of 2017. We can see a very decisive breakout, so we are looking for a move towards $550. And I came out with this projected level taken from the widest leg within a triangle. Okay, so it's actually called a triangle projection. I took this distance of wave A, and I projected it from end of a wave E, which was final leg that completed this triangle formation. So I'm looking for this move. However, there is also another projection which I used when market is getting a little bit more extended. You project it from a breakout point. Okay, same like you have with the head and shoulders projections as well. So in such case, you're looking for a move towards $630. However, I always try to focus first on minimum, more closest target, and then go step by step towards next targets. Okay, traders, thank you very much for your attention. If you're not our member yet, check out ForexAnalytix website. We have a special offer for 10 days for only $1, so check this out. Or you can simply access free our webinars each day, so you're also welcome here to register on our homepage. Okay, traders, thank you very much. I hope you will have a very good trading week.